All right, so yesterday I didn't get to making a video, but I didn't take any trades, and there wasn't really a lot to talk about, but there was an interesting talking point that came out of the day that I would like to go over, which is knowing when to stay out of the market, knowing when the market conditions are not favorable, when price action is not moving how it should be, especially for how you want to trade, and when to stay out of the market in these cases. This is something that's really important because obviously if you can make good trades, if you can find good trades, it's only half of it because you're finding the good trades, but then how do you know when a trade is bad? How do you know when not to take a trade? How do you know that even if there is an aesthetically good looking setup, like on the 1 minute to 5 minute chart, the setup looks good, like you've recognized the structure, you've seen the structure before, how do you know that it's still low probability and it would still be best and probably beneficial for your strategy if you were to just not take that setup, and beneficial for your win rate as well? So Friday was one of those days, so this is why this came into my mind, because it's something that I took a long time to get good at, and now that I'm getting better at it, it makes trading a lot less stressful. So I used to not really know what it meant by like a worse price action day, a day where I shouldn't be trading, and so I would just try to force trades anytime, anywhere, just trying to find that setup, find that mechanical fucking shortcut that I can always use to make a trade, and obviously trading doesn't work like that. So as we can see, Friday's candles start right here with these candles, and these are our 4-hour candles for the day. This absolute disgusting piece of shit, bro. We just get piano key candles on the 4-hour chart. Piano key candles on a 4-hour chart, never a good thing. When they're really big like this, maybe you can have some opportunity here, but small little form, like we're in a 250 point range, just barcoding up and down, that's not good looks from the 4-hour chart perspective. So that's hindsight, right? But one way you can kind of see this coming is it's hard to see it coming. You have to recognize it on the lower time frame as the New York session opens. One thing that I look for when I trade, obviously, is a reaction off of some higher time frame PD arrays. So the only PD arrays that are in play in this little range of price, in this little box that we kind of ended up in at the end of Thursday's trading, there's no 4-hour fair value gaps until we get up to 18,700, which we never got to. There's 4-hour fair value gaps underneath here, and usually I'm looking for reactions off of fair value gaps. Those are the highest probability ones for me. But that reaction off that gap came earlier in the day before the New York session started, before I was looking to take trades. And that was like the last bit of clean price action that Friday saw. So now we're going down to the hourly chart, and there's not even an hourly fair value gap anywhere in here. The hourly fair value gap is all the way down here, and obviously price didn't reach down that far. So on the hourly chart, there's really nothing to work with. There's no gaps, no order blocks over here. There's nothing in this range right here. This little box is just the new week opening gap, so that's kind of the only thing that's in play right now, and you can kind of see price just chilled inside of it for a lot of the day. So if you go down to the 15-minute chart, how do we recognize that this is going to be a bad day for price action? It's actually more evident on the 1-minute chart. So let me just go down to the lower time frame. So one characteristic of bad price action on days like this is if you get to the open and right away, 9:30 New York open, there's not any displacement. So one thing that we're looking for with good price action is displacement. We want to see price definitively moving one direction or another. And we want to see price taking liquid, reacting off PD arrays, behaving in predictable ways, because you don't want to trade unpredictable price action, right? That's just completely illogical. Why would you want to do that? So this 4-hour fair value gap right here is what we were looking for a reaction off of. This is the only PD array that we could have hoped for a reaction off of. We got this liquid over here. So we reacted off of that. We bounced off of it, but that was at 8:30. And you can see that setup. You could take this. This is an IFVG setup that I would take, right? This checks all the boxes right here. That was our only time we reacted off the 4-hour PD array. But I'm like, okay, there's still hope for the AM session. As I'm sitting down, 9:30 AM, I see this horrible price action, but price does have a general direction it's trying to go in. So we took this liquid up here, these red sleeve equal highs by like one tick. And now we're kind of trying to push down. We see the order flow changes, the state of delivery changes. We pull back up here, and we're trying to target these lows down here. So now at this point in the day, I'm looking at this low right here, this low right here, and this fair value gap right down in this range. And I want to see price sweep this liquid at least. It doesn't have to go all the way down here, because if it didn't go all the way down here and it reacted up, that would confirm this move as a change in state of delivery off the fair value gap. But so we get into the fair value gap here, but we don't actually take this liquid. We create like if you look at the low of this candle, the low of this candle is 404 and the low of this candle is 404.5. So we missed it by 2 ticks, right? So that invalidates these long setups that come next. Like this is a sloppy long setup, to be honest. And it probably, I mean, if you are mechanical about break even, it would have been a break even trade. If you're a little more lenient, it would have been better. But since this candle, like it would be nice if this second candle had flipped up and inverted like around here. And that would have been a very aesthetic setup if we had taken the liquid and then we could have ran this up. But the inversion came up here. That's super high up. That's how many points above the gap? We're 20 points above the gap. That's not a great entry to be taking market order. When I see that this low gets respected, there's no S&T, by the way, which is one thing you can look for when this thing happens, when these kind of close lows happen. There's no S&T here. So this low hasn't been taken on a correlated asset, which means that I can't take this setup. I can't take this setup because it could just boom, flush out these equal lows. So price runs up, nothing happens. We go back down, we get this nice little BPR here, bounces off a respected, but it only goes for this internal low, and now we bounce back up. And the whole time, look at these wicks. Look at all the wicks on price. This is just disgusting price action. And this entire move down, there's only a couple fair value gaps, right? And the macro, 950 macro, which is the highest probability time of the day for me, didn't take out these lows. Then from 10 to 11 a.m., we just get this horrible chop in this tiny little range here. We finally get to 11 a.m., price doesn't clarify at all. 1050 macro doesn't give us anything. This is how you should know that for the rest of the day, we're not taking any trades, right? So I got off the charts at this point because I'm looking at this price action, and the rest of the day is Friday PM session, which is automatically not going to be a great session to begin with. I've never had good experience with Friday PM session. It's always just a lot of this, right? So I think one way you can look to recognize this is if you get, like I said, if you get the shitty 9:30 a.m. open, no fair value gaps, no displacement, no protracted move any direction, lots of wicks, and then you don't take the liquid and you react off of it as if you did, it's not a good sign. You don't like to see that right there. No trade there. Obviously no trade anywhere in here. And like I said, there was no higher time frame PD arrays in play besides that 4 hour fair value gap. And big criteria for my trades, I'm not taking a trade unless there's a higher time frame PD array. So the only trade for me today, or for Friday, I guess, was if we moved all the way down here, or if we had actually gotten that liquidity sweep on open and been able to run back up. So what you can do in these scenarios to make sure that you don't make a mistake and get caught up in this price action is to just follow your rules, man, because your rules should exclude any entry in this mess. Like if your rules give you an entry somewhere in here, you should probably reevaluate your rules, because your rules should tell you that this is horrible price action. You should not be looking to trade. Now, we did actually get a protracted run up at like 1250. We kind of pushed out of this little chop range here. But what did we not get before we pushed out of this range? What did we not get? Like if we consider this whole thing to be a range, let's go to a 5-minute chart. Maybe that'll clarify what I'm trying to say here. What did we not get out of this range? Manipulation. We didn't get any manipulation, and we just pushed right back out, right? So you could argue that this right here, we could define this as some accumulation range. We could define this as manipulation and this as distribution, but it doesn't really fit the framework for me, because as you notice, when we manipulate out of this range, we leave some targets. And we're not supposed to leave targets on manipulation. We're supposed to leave targets on the accumulation, right? So we manipulate out of this range. There's no fair value gap we're reacting off of here. We're kind of just in no man's land, right? So since there's no fair value gap in this little range, there's no PD array in this little range, there's no real reason why price should be reacting off of this range. We should at least go down to take this liquid, and that would give us a reason to bounce back up, because this is only internal liquid and we want to take care of this too at least. But now there's not really a lot left for price to do. Like we kind of just come back down. You can see all these wicks on the 5-minute chart. If you go to the 1-minute chart, doesn't look any better. Shit is atrocious. We take this high, and then what happens? Just nothing, dude. Just dead price action for the rest of the day. So I know I was kind of all over the place with that analysis, and to be honest, I didn't really have a plan for the video, so I didn't really know like how I was going to frame what I was trying to say. But hopefully y'all got the idea. Like we're looking for reactions off higher time frame PD arrays. We're looking for displacement. We're looking for strong continuous moves. We're looking for a higher, like a long-term draw on liquidity that's actually being moved towards and not just being chopped away from, like boom and then we're boom and then we're, you know what I'm saying? Hopefully y'all stayed out of the market on Friday. Hopefully we didn't get any bad losses. And we can come back next week and fuck shit up. And I will see you guys later. Peace.